Good evening, distinguished guests. A very warm welcome to the second Bloomberg India Economic Forum. My name is Arijit Ghosh, and I head Bloomberg News in South Asia. It's such an honor that we have with us Shri Arun Jaitley, the Honorable Minister for Finance, who will be delivering the keynote speech this evening. We were privileged that Prime Minister Narendra Modi had laid out his vision in the inaugural Bloomberg India Economic Forum. That was over a year ago, and India's economic and investment landscape has continued to evolve. You can witness interest in the nation from the fact that foreign direct investment in India has surged to a record, while credit default swaps are pricing in a potential upgrade for India, even as the economy is slowing at the slowest pace in 3 years. On July 1st, the goods and services tax regime was introduced, while we had the insolvency rules put in place last year. From Bloomberg's perspective, we have been tracking the GST rollout, the new bankruptcy code, other reforms and investments closely, and analyzing the implications of these developments for global investors and India watchers. Bloomberg's growth has mirrored the progress in Asia's third largest economy. We celebrated 2 decades in India last year and partnered with Raghav Behel's Quintillion Media to set up Bloomberg Quint, a multi-platform business and financial media company. In fact, I'm extremely thrilled and excited to announce that Bloomberg Quint will start India's first digital live streaming business news service with today's program. Mr. Jaitley's speech, you can see there, Mr. Jaitley's speech, as well as the ensuing panel discussion, will be streamed live on Bloomberg Quint's website and its social media platforms. Investors around the globe will also be able to watch this important program on the Bloomberg terminal. Bloomberg regularly curates discussions to bring together policymakers, top newsmakers, and business leaders so that stakeholders can hear directly from them on critical developments that impact business and influence investors' decisions. Over recent years, global investors we speak to around the world are taking a larger interest towards India. They are particularly keen to understand the nuances and pivots that are taking place in our fast-moving economy. Following Mr. Jaitley's speech, our distinguished panel today will explore what will take India to regain its mantle as the world's fastest growing economy. Over the last 20 years, Bloomberg has witnessed, helped, and benefited from India's transition into one of the largest and the fastest growing economy into the world. Bloomberg sits in a very unique position where we are able to provide investors with the news and data, transparency, and technology that they need to take informed business decisions, and will continue to do so for the years to come as India strives forward to be a driver of growth in Asia and in the global markets. We hope Mr. Jaitley's address and the discussion will give all of you a better view of where this $2 trillion economy is headed. Thank you for joining us today, and I look forward to interacting with all of you. I would now like to introduce my colleague, Unni Krishnan, who is the Bureau Chief for Bloomberg News in New Delhi, who will take the program forward. Unni.
Thank you, Arijit. And I don't want to be between you and the Finance Minister's speech, so without much ado, to figure out what's keeping the Finance Minister busy these days and to get a sense of how growth will pan out in the coming months, I now invite Minister Arun Jaitley to address us.
Thank you, Mr. Krishnan. Thank you for having invited me to speak at the Second India Economic Forum organized by the Bloomberg. A forum of this kind and the discussion that follows this, my brief comments, really helps us to objectively analyze where we stand today. If I look around the world past 3.5 years, it's only the last few months that one can see the curve turning a little for the better. Prior to that, it was an uncertain world and an unsupportive, slow-moving world. And one of the great challenges before India was in that rather timid state of growth in the world as to how we force our way through. There are, of course, periods in history where there is an extraordinary boom period, as was between 2003 and 2008, where the global winds blow you along with themselves, and some domestic initiatives give you the added advantage. But here we were facing somewhat globally unsupportive environments. And yet I would say with a sense of satisfaction that we broadly put the economy on track. And I think in terms of maintaining a steady rate of growth, in terms of systematically moving forward in the reform direction, not deviating from the overall path itself, and maintaining a more transparent, a more realistic fiscal prudence better than most periods of recent history, we were able to move forward. But then in the management of an economy, there is no easy day. Situations do throw up their own challenge. And therefore, as I analyze the big picture where we stand today, as to what the positives and what the challenges really are, I think one of the biggest strengths I witnessed for India, and this is not merely the central government, I've also seen it in the state governments, that the desire to improve, reform, and implement has increased. And therefore, across the country, now as winter will set in, I'll probably be traveling from state to state, irrespective of the political complexion of the government in that state, participating in their investor meets, each state trying to make out a case why it's better than its neighbor. And I do find that there is a distinct change, both in policy, the desire to attract investment. In fact, the language and the idiom of politics itself, in most states itself is changing. I do feel that this one change, where the desire to grow has improved, I witnessed in the GST Council itself, where I've had 21 meetings, each one lasting 8 to 10 hours. And notwithstanding conflicting political opinions, almost after every meeting, we've come out with almost a unanimity. I've had the numbers on my side, but I've not had to use them even once, and I hope it's a precedent for the future, that eventually everybody has realized that overall, in the larger interest of both the central and the states, in the interest of progress itself, one really has to put his heads together and cooperate with each other. The second important change that I have seen, and that's the debate in India, which is distinct from what used to happen in the 90s and thereafter. When the reform process has started, it was more out of compulsion than conviction. It was a situation where an alternative option did not exist. And therefore, the path chosen obviously was the correct path. And then the debate would start every 2 years after a series of steps were taken by successive governments as to whether there is a political cost involved. There would be conflicts within the government, within the ruling alliances, within the parties in power. But I think the character of India's population itself is changing. It's become far more aspirational. And today in 2017, as I stand here, I find that the constituency which supports reforms politically also and numerically has become much larger than those who resist it. And I'll give you one example. The last few years, even in the developed countries, have seen the debate over protectionism and those who support protectionism gaining strength. Now, we, of course, through the 90s and so on, witnessed a similar debate. But over in the last 5-7 years, I don't recollect having really seen a serious or heard a serious viewpoint in India, in parliament or outside in the media space, where that has remained an issue at the moment in India itself. And that's an indication of the fact that the aspiration of people itself is changing. And in fact, there is a greater keenness to support reforms. And normally you will find both in the media, public space, social media, a critique of those who try to ever obstruct it. And therefore the pressure itself shifts on the obstructionists rather than those who are pushing reforms. And I think it is these advantages, notwithstanding the usual advantages of the size, the domestic market, the entrepreneurship that India has in its favor. Governance reforms in India have become far easier. And one impact of it we are now seeing that there was a much greater support to transparency moves. And therefore, if one of the factors we've seen, that's a salient shift which has taken place, that there is a major fall, certainly in the central government and to a large extent even in most of the states, as far as issue of corruption is concerned. So decisions being taken for collateral purposes, large amount of illegal consideration being exchanged, and then controversies plaguing policy, as we used to hear it in the past, is something which has disappeared. Governance efficiencies in terms of governance reforms, I recollect when I had recently the additional responsibility in the Ministry of Defense, and I was looking at some of the expert reports, and we found that there was a huge space to utilize the personal resource of the armed forces elsewhere. So should we use them for running a postal service within the army, particularly when a mobile phone is available almost on every part of the border itself? Or should the army be running its own dairy farms when that's a function which can be outsourced? And a move which would have attracted huge opposition years ago, 57,000 personnel of the armed forces was spared out of this and used for the purpose for which they are actually meant to discharge service. And these are usual reforms in governance which are now taking place in the center, as even in some of the states itself. The other day, last meeting of the cabinet, we found that there were 17 obsolete printing presses that the government of India is still running. So we compressed them into 5 modern printing presses which are required for serious parliamentary or governmental printing, and decided to merge 17 into 5. And I think moves of this kind, which used to earlier invite a lot of opposition from the unions and so on, the environment seems to be changing, and therefore it is incumbent on governments and policymakers that here is an opportunity where India's public opinion and the support base, coupled with the desire to grow, has increased. And therefore, if you say India is growing at 6%, people say we are not satisfied, even though maybe much higher than other competing nations. So the level of aspiration itself has certainly grown. Now, sectors which were not opened up, in a series of FDI reforms which we've been opening up, abolishing the FIPB and so on, and these are now considered to be usual moves which would have only a couple of years ago attracted several kinds of comments itself. I think if we look at last year, since you mentioned your last year's conference, there have been several important initiatives in the last 1 year. The Monetary Policy Committee was an important initiative. I think it's a culmination of a reform which was just waiting to happen. The goods and services tax, it's early days, and I do believe that it's been far smoother than even what some of the best supporters of the GST move had considered it to be. What we now require is, if you look at the big picture, I think the passage of the laws in Parliament and the state assemblies became quite easy. The decision-making process on the top has stabilized. The review mechanism, wherever it's required, also seems to be now maturing. It's a huge IT network. We need some change. We need to see some more change in assessee behavior. For instance, the July taxes were to be paid till the 20th of August. And when I checked up at the midnight of the 19th, 75% of the assessees had decided only to pay on the last day. Now, if 75% of them decide only to use the last day, obviously you're going to clog the system. The system is not at fault, irrespective of its size. Therefore, some assessee behavior also will have to undergo a change. And from the initial trends that I've been getting, the 2 months is too early to study a pattern itself, I see a very significant scope for expansion. The number of assessees has increased and is increasing. A lot of small-scale assessees are now opting more and more for the composition scheme itself. That's providing an option for them, and also sending an indication to us that this seems to be more acceptable to the small-scale assessees themselves. And I'm quite certain that both the states and the center are going to significantly gain. But I would just keep my fingers crossed for another 2 to 3 months before being more affirmative about the pattern that we have seen in this. The entire effort on the switchover of the spending character of India from a cash to a more digital economy, to do away with a padder or a shadow economy itself. It was not an easy area. No government in the past has dared to move on that pattern. And in fact, governments had almost accepted that this is the Indian normal. And I think if we analyze all the steps that the government had taken from day one, starting from its first campaign on financial inclusion, so everybody must have a bank account, We first went in for those who had illegal assets outside India. We gave them an opportunity to come clean on payment of higher taxes or penalty, and then provided a very serious penal consequences if you fail to do so and were then discovered. We put the Benami law in place. We had an IDS scheme asking people to declare any domestic income if they had accumulated it and not declared it. And then you required a shake-up of the system. And the demonetization certainly was a shake-up. And I think the demonetization debate in India actually is being held at two different levels. The first level was, oh, there is an inconvenience caused. There are queues which have come up. Oh, the money has come back into the system. But that was the whole idea. The idea is not to confiscate money. The idea is to make sure that this anonymous cash operating out in the system itself becomes a part of the system. And I've been repeatedly saying that there were three principal objectives besides the big picture that we wanted to shake and change the Indian normal. We wanted to create a new Indian normal. And under this new Indian normal, the idea was, one, do we squeeze the quantum of cash currency, particularly the high denominational currency? In the first round itself, we managed to squeeze a significant part of it. Do we increase the taxation base? So the number of people who start now declaring, a lot of people had to, because once you put monies into the banking system, the anonymity of cash was lost. And therefore, cash got identified with its owner. And three, does it start a move towards digitization? It certainly made digitization a center stage economic agenda of governance in India. The number of digital transactions itself multiplied itself. And I think that process is now going to continue and continue to expand itself. How does India take, or Indian industry, if I may say, take to the new, again the new normal created by the IBC? It's a legacy problem which I have inherited. During the boom period, lending did take place, expansions did take place, capacities were built up. Now, whether it was in the hope of expanding the economy or was there an element of recklessness, that jury would still be out. And we kept coming back with the schemes through the RBI and the banking system, empowering them. We changed the laws, we changed the DRT, we changed the Sarfazi laws, we changed all the laws. The RBI came out with one policy scheme after another. And it made some headway, not a very significant headway. And a section was quite satisfied with the status quo, because the status quo was that things really weren't moving. And therefore, the idea that you can be thrown out of management almost instantaneously and you exit and somebody else comes in, I think certainly has sent the right message to a section of the industry itself, or the section of the borrowers itself. It's still early days, and I think of the management of the entire banking system, the resolution mechanism of the NCLT and the professionals who are there, other institutions which create the supportive environment. And when I say other institutions, it may also include the government, it may include parliament and political opinion, it includes the media, it includes the judicial institution, as to how we create that enabling environment in which, with transparency and trust, the resolutions work themselves out. And I think we'll all need to now educate ourselves from the international experiences as to how they've managed to resolve and get over these challenges by themselves. It was indeed mentioned that recent data has shown that there is some slippage in the growth which has taken place. Many have attributed it to a variety of reasons. I don't want to go into that deeper analysis at this. Maybe in the course of discussion you will do that. But one I think analysis is quite clear that India does need more private investment, particularly domestic private investment, and it needs a healthier banking system in order to support that growth. In terms of our ability to reform and undertake further reforms, improve policy, I think the Indian policy managers have demonstrated enough will to do that. And I think that's not a capacity which is doubted now anywhere in the world. Nobody questions India's ability even on big bang reforms now. This is a phrase which was being used 2-3 years earlier, because India can take more difficult reforms. Nobody doubts the sense of responsibility in the management of the Indian economy. And therefore, we are all conscious of the fact that there is a value and an importance of the kind of fiscal prudence which is required in an economy. We are a responsible economy. At the same time, we also are conscious of the need in such situations of spending. And obviously, the real answer lies in finding the balance between the two. And the balance lies in really finding the resources to do the same. And I think India and the world must be rest assured that policymakers and government in India is conscious of this responsibility itself to support our banking system, to support the necessary policy changes further required to respond to these challenges, so that the position that we've gathered, and this is a position we've gathered for the first time for 3 years in a row as the fastest growing major economy, that we are able to continue to retain that, because anything short of that, that's the level of aspiration we have in India, doesn't satisfy India anymore. Thank you very much once again for this. If there are any further issues, I'm sure I'll get an opportunity to discuss with you.
Thank you, sir. So I'll begin with what you said. It struck me a lot that you talked about 6% not being enough and the aspirations are far higher. You talked about people, quickly jumping conclusions over how GST is panned out. In your closing remarks, you mentioned about the ability of Indian policymakers to find the right balance, and we're not as responsible as some people are quickly, out there to judge us. In these circumstances, being the finance minister, is it a challenge? It's really tough because people are just there to judge
I think every day is a challenge. And I said, there is no easy day in the management of economy. But then we've all learned to live in a very active democracy. Because there's a luxury which commentators have, which media has, where you have the facility of always saying, well, on the one hand and on the other hand. So whichever hand I adopt, you give me the indication of the other hand. But we don't have that privilege. So we have to decide which way to go. And therefore, I think if you don't decide, the challenges arise then. But if you are able to decide and then deliver, eventually you are able to carry the public opinion with you. For instance, I'll give you an illustration. The few days prior to the 1st of July, from all over, including and I was extremely disappointed when I heard private sector voices saying, oh, we are not ready. Ordinarily, in any developing economy, the private sector is way ahead of the government. The governments are not prepared. The governments take time to decide, and the private sector is marching ahead. Here, nobody expected us to meet the deadlines. Nobody expected the network to be in place. Nobody expected the rules to be in place. But this is one case where such a major reform, we stuck to every date and every deadline. And I must say, I was not only by my colleagues and the Prime Minister, but in the meeting of the GST Council, a finance minister from a Congress government walked up to me. His party was saying, please defer it. And he told me, if you blink, you'll never be able to do it. For heaven's sake, don't do it. So and I think that was the right advice. And therefore, one of the ways of meeting these challenges is that you take your time to decide, but eventually the decisions will have to be taken.
So, with the economy slowing down over the past 5 quarters, now a sub 6% growth number, what would be your top priority to reverse this slowdown? Like, what needs to be done right now that could immediately...
See, I won't get into the specific moves because that leads to speculation. You've seen a speculation because when I say we need to respond, friends from your profession say, oh, stimulus package. And then there's a big debate on the size of the package itself. I think we can't convert management of the economy into a fictional debate. I think one has to analyze. Are we getting enough FDI? We certainly are. Is there a lot of governmental spending taking place at the center and the states? It is. Are there policy changes taking place? Certainly there are. There's a lot of investment going into both social and infrastructure sector. Is there a scope for liberalizing further in certain areas to send the right signals? There could be, and it's reasonably plausible. And then comes the final issue of the point that I make. How do you maintain the balancing act between continuing to spend in an economy, continuing to support your banks and strengthen them, at the same time maintain some of the best standards of fiscal prudence? And I think that last part is the current challenge that we really are facing. And this seems to be the logical course in order to get back. I don't think there is any need for panic. There is certainly a need for analysis and for responsive action to this. And we are fully prepared for it.
So, I mean, that brings me to the point that is it time that since private sector investment is not coming up, the government has to take that traditional role of continuing to spend to keep the economy up so that it doesn't lead to a deep entrenched slowdown. Would you then say that we don't have to be dogmatic about any target numbers or stuff? If need be, we need to find a way to keep the economy moving and keep growing and possibly find that extra bit for spending.
You see, whichever way I answer your question, it will lead to further speculation and consequences. Yeah. And therefore, I think in my previous answer, if you read between the lines, you'll probably be able to find some response.
Okay. One part of the slowdown has been partly because, and I won't press you on this part because you said you don't lead to speculation. One part of the slowdown has been largely because the exports haven't done well. In an era when most of our trading partners, especially the West, there's rising protectionism, is that a challenge to push exports into that region? Especially Trump, US under President Trump.
I think there are multiple challenges in the sense that there are some which we can immediately address, and there are some which are because of external factors. For instance, even though we are in the second month of the GST implementation, the exporters have come out with the issue of refunds to be expeditiously made so that the capital doesn't get stuck up for a long time. The Commerce Secretary and the Revenue Secretary already had a meeting with them day before yesterday, and I think they are seriously looking into it so that they can come to the assistance of the export sector itself. And depending upon the affordability, the Commerce Ministry has been pressing for some further advantages within the permissible setup to be given to them. But then there are external factors, and those external factors certainly do impact. There is a third area also. The Chief Economic Advisor made a detailed presentation in the GST Council that there are a lot of embedded taxes on exports in the states itself. And therefore, the states also have to make a contribution and look at those embedded taxes. I can say, and that's why I was careful about my words, that the first 2 months may not be a sufficient indication, probably another 2-3 months would be. So depending on which way the revenue of the states moves up in the GST, which I think would be positive, the ability of the states also to give some relief to the export sector on the embedded taxes in the export area can improve the export capability of the states itself.
So what's happening in the West is not a bearing on
it certainly has a bearing, yeah. But that's a bearing which is a factor and purely external, which is immediately not in our control. But there are still a lot of things that you can do in India in order to improve the export competitiveness of the Indian industry.
You said that a lot of people were surprised when GST was rolled out on July 1st. Did you anticipate the kind of the sort of problems that are cropping up in the just?
Well, if I saw some of the, because I was keeping my fingers crossed that there would be a huge chaos. In fact, I'm very pleasantly surprised that it has been the smoothest possible rollout, because the trade has taken to it, the industry has taken to it, the number of assessees in the first 2 months itself has shot up significantly. I had expected major technology glitches. In fact, when the examination results used to come out, and in the first few minutes, the system used to get loaded. So we are used to this, even in the initial days of technology. So if it can get, any system can get, this is one of the biggest systems ever made in India. And the capacity of this system is to take 1 lakh returns per hour. But if 50 lakh people wait for the last day, then obviously you beat the system to it. And therefore, I think it's a problem that some of the assessees are inviting to themselves. And that's why I made a point that assessee, so if instead of waiting for the last day, if they are spread over the last 4 days or 5, at the end of the day, it's the 70, 80 lakh people who have to file a return. The system can comfortably take 24 lakh returns a day. So if it's spread over 4 days, it'll be extremely comfortable. But if everybody comes on the last day, then he's certainly inviting some trouble.
Yeah. I mean, that brings me to our interactive part of this evening. You know, you could log on to pigeonhole.at and answer the question that, do you think foreign investors have taken a positive view of the GST regime? And you will have to put in the password BBGIN, and you could see the results there. It's about 62% say that it's quite positive, the way it's been rolled out. I mean, the other big ticket reform that has happened in recent past is the banking system and the way you're cleaning up balance sheet. Has that panned out the way you thought? Because it seems like it's going to the courts, coming back, and there is some inherent...
Which one?
The bank loans and cleanup and the 12 accounts that have been...
You see, let's see how it has evolved. In the 1980s and 90s, we tried taking it out of the judicial system and went to the DRT. The DRTs almost became like court. We then tried the Sarfazi. It did work. And therefore, if you remember, in 2001-2, the NPAs were very high, and they did come down. A series of other factors also followed. Then we've tried, again, when the NPA started rising, the banks themselves were given various enabling tools. It worked slightly. I would say it worked marginally. It didn't work to a very large extent. And one of the issues was, I think, in the system that we live in, where there was inherent suspicion and lack of trust, fear of consequences. So the oversight committee mechanism, the move to amend now the Prevention of Corruption Act, which the parliamentary committee has cleared. I hope when Parliament functions next, it's passed. Then the IBC. It's a quasi-judicial process by which you follow a global pattern and then come to resolutions. I think eventually a few factors will determine its success. Are we able to maintain the timetable which is prescribed in law? Are we able to avoid interim judicial interventions? Are we able to adjust to a system where bona fide decisions taken on commercial considerations are backed with trust rather than looked at with suspicion? And I think the whole maturity of the system will determine the environment that we are able to create under this. And if we are able to do it, even if, I think it will move further. That's how countries elsewhere in the world have resolved these situations. They haven't allowed the crisis of this kind to, in a particular account, to persist indefinitely, because that doesn't help.
But then are we confident that we'll stick to the timelines? Because some of the accounts have been going back and forth to the courts.
No, I think in one or two cases it has happened out of some concern. But I'm quite sure when in a longish hearing, the courts get an opportunity to really understand and then analyze the provisions of the Act itself. They'll probably realize the purport of this Act itself. Because I think after this Act, then the other options then barely exist.
And the other part of this entire exercise was to see some stronger consolidated banks. I mean, what's the progress on that?
You see, that policy remains, but that really has to move parallelly along with our effort to strengthen the banks itself. Now, that's something which we've been analyzing, and the department concerned in consultation with the banks is seriously looking into it. We are at a very advanced stage of deciding our strategy. We are looking at both consolidation and strengthening.
And when do we see the first batch of consolidations happen? Will it see?
Well, I won't give a timeline because, you see, the object of consolidation really is to create bigger and stronger banks. In the current environment, if that's a priority, a greater priority is to improve the health also. Yeah. So I'd rather have stronger banks merging rather than weaker banks merging.
Okay, fine. And that brings me to one big reform measure, like you said, a big bang reform measure. Nobody thought that any government could sell Air India. You're chairing a committee which is looking into the sale of Air India. What's the progress on that exercise?
No, I think it's moving quite well. We've had a couple of meetings of the group of ministers. We had one meeting yesterday also. And the transaction advisors will be appointed very soon. The transaction advisors will then go into and let us know what the universe of bidders really is. It's a case where once we have a feel of the market and the universe of bidders, that you decide what your terms of bidding are going to be. And we've got alternative strategies in place. And I can tell you we've had a number of meetings of the group of ministers and the committee of secretaries, how to deal with the main company, how to deal with the subsidiaries, because there are 5 incidental businesses also it has, what to do with the hotel company, what to do with the ground handling company. We've worked out all those systems in place. And I think once we get into the realization of what the universe of bidders is and the likely response is going to be, we'll settle the terms and ask for the further movement of this.
Since it's a flag carrier, would you want it, the domestic nature to continue? It should not go out of Indian hands?
You see, I think today it is one company. Today the domestic and the international operations are all merged into one. And therefore, even when it's merged into one, I now realize that there are concurrent businesses. There is a small company which deals with regional connectivity, and there is another company which just does the international flying to the Gulf area. So it's a multiple kind of a structure which has been created over the few years, but that's the structure in front of us, which we are now dealing with.
So that doesn't answer my question of whether
no,
you
I think we always remember that privatization is the art of the possible, and therefore it's an exercise which has to be transparent. It has to be an exercise which has to be acceptable to a cross-section of public and political opinion. It's an exercise which will then eventually result in a better performance itself, and which must arise confidence. And the prospective buyer or the universe of buyers must be such that their identity itself inspires confidence, and that's why I say it's the art of the possible. And therefore, how do you sell each unit, or you sell it consolidated? Now, these are all factors that you keep your options close to your chest. And once you've got the feel of the entire market as to who all are there, it's only then that you determine as to what your terms are going to be.
Yeah. So you're talking about reforms here. I mean, that's our next audience poll. Do you think the government will undertake more structural reforms that run up to national elections in 2019? You can go to pigeonhole.at and answer. And you should have the result. I would now like to take a couple of questions from the floor. So is there anyone who wants to ask a question?
Finance Minister, I'm hopefully audible to you. Thank you for the speech. A couple of related questions, please. First is on employment, which I'm sure is a very critical socio-political economic criteria. Unfortunately, it's an area where the data is very fuzzy and more anecdotal than reliable. What is your own sense of what's happening on employment on the ground? Second related question, you mentioned about banking and strengthening banks. Clearly, private sector investment and that investment cycle is going to be critical to employment, critical to generating employment. Do you have a sense of how much of the capital hole in banks will look like and what the solution set around plugging that hole could look like?
You see, as far as employment is concerned, you're right. We don't periodically come out with authentic job data as far as India is concerned. But the one fact appears to be that a large part of India's employment is much bigger in the informal sector than in the formal sector. A lot more people are self-employed. So in the informal sector, they not only employ themselves, they also generate a job or two themselves. And when private sector investment does suffer, in the formal sector itself, the job creation takes a hit. But here, and this is related to your second question, I think a large part of the structured big private sector and well-managed companies have also been now resorting to raising money rather than directly from the banking debt from the bond market itself. So they found alternate sources of capital themselves growing in order to fund themselves. And therefore you do, when you spend a lot on infrastructure, when you spend a lot on skilling, when spend a lot of lending takes place on the informal sector through schemes like the Mudra itself, and therefore you find a sizable job creation does take place in these sectors itself. As far as the banking sector is concerned, certainly, I think there is capital which is required. And therefore, how do you raise that capital? Do you give it out of the budget, or do you bring down the equity in some of those companies, the banking companies, down to 52%, as we've said? Do you create some other mechanism of through the asset of the banking system to raise capital? These are multiple options which are available to you. Because, as I said, while strengthening them in terms of capital is absolutely necessary, the balancing act, and that's the decision a government is to take. That's not a decision I can really shift the responsibility on anybody else. That's a decision we have to take into how do we then, in a year where you've brought a large number of structural reforms itself, bring that balancing act between making sure that the capital does come, at the same time also trying to maintain the best standards of fiscal prudence itself.
I think we've got time for one question. Rashish, you want to ask a question?
Yes, sir. Again, thanks a lot for an overview of how the government is thinking. The question I had was, we need a lot more investment in infrastructure, and as you said, the investment from the private sector has been slow to come. An interesting initiative that was started by the government was the NIIF. How do we see the role of NIIF in hopefully kick-starting the investment sector, and how far has the progress happened on that?
You see, the NIIF was started, the structures have been put in place, the CEO has been working, the CEO has been negotiating with various funds internationally. The government is willing to put its share as soon as the first tranche comes. And I've been briefed that once the first tranche itself does come, and there is some early harvest that takes place in terms of supporting a few projects thereafter, then the confidence it creates will allow it to operate further. And I've been told that we are almost on the verge of the first major breakthrough.
I think we've completely run out of time, but before we wind up this session, I just want to check. I wanted to go back to the same question. So no stimulus coming. No stimulus coming.
Well, I'm not giving you a headline either way.
Okay, thank you, Mr. Jaitley. I would like to now invite Sunny Chabria, Head of Sales for Bloomberg in South Asia, to come up and present a token of appreciation. Sunny. That brings us to the close of this session. I would now like to invite Harsha Subramaniam, Executive Producer for Bloomberg TV in India, for an exciting panel discussion on the Indian economy.
Thanks, Sunny. Ladies and gentlemen, thank you so much indeed. And thank you all viewers who've been watching this conversation live streamed on BloombergQuint.com, on all our social media platforms, and also live on the Bloomberg terminal. We've got an exciting panel discussion coming up in the next couple of minutes. Are investments, jobs, and bank cleanups enough to regain India, enough for India to regain its mantle as the world's fastest growing economy? Let me invite first Mr. Amitabh Kant, CEO of Niti Aayog, who is going to join us in a short while from now. We also have Shanti Ekambram, Consumer Banking Head at Kotak Mahindra Bank. Rashesh Shah, Chief Executive Officer and Chairman of Edelweiss Group. And R. Shankar Raman, CFO of Larsen & Toubro. May I first invite Shanti Ekambram on stage. May I also invite Shankar Raman from L&T. Mr. Kant. Please. All right. Without further ado, let me begin this conversation. Mr. Kant, thank you so much indeed for joining us as well. We're talking at a time when the growth in the economy has slowed for the last 5 quarters. 1 year ago, low oil prices. We were the fastest growing economy in the world. Things were looking great. Why are we here?
You know, when you carry structural changes in the economy, when you're trying to formalize your economy.
We may need the mic.
Yeah.
Please not.
We are wired.
Well, I just walked in, so you're carrying out some major structural reforms in your economy. You're trying to formalize your economy. You've brought in something which everybody was asking for, GST. I think Indians will have to learn the art of living with some teething issues of structural reforms. And I don't think it's a long-term decline in fortunes as such. I think we need to push for even greater reforms. And my personal view is that we'll be able to set this house perfectly in order, and I don't think we need to take a short-term perspective of this. I'm a great believer in fiscal discipline, and I'm a great believer that India needs to continue the process of structural reforms. I think we need to push for disinvestment in a much, much bigger way. In Niti Aayog, we made a vast number of recommendations which we need to keep pushing for in terms of implementation. Actually, the public sector investment has more than made up for the lack of private sector investment in the last 6 months. But whatever government has created over the years needs to be put out into the market. Government is extremely poor in operation and maintenance, and therefore, we need to carry out a continuous process of reverse BOT, because these are projects where risks have been totally eliminated. There are roads where tolls have already come in. There are airports which are well functional, and there's no need for government to run them. You need to completely put them out into the market. I'm also a believer that you need very major structural changes in areas of mining. I mean, India is a very undermined area, and there's huge possibility in terms of very major reforms, and it can be a very vast, it can be a sector which can greatly create jobs. And my personal view is that there's still a huge possibility of carrying out very many reforms which can push both growth and employment in the Indian economy. So I don't think we need to take a short-term perspective. We need to keep taking a longer-term perspective of continuously reviving the private sector investment. I'm not a believer that it's government which can create growth. It's private sector which has to create growth. And we need to keep creating opportunities for private sector to keep investing in the Indian economy.
Okay. Before we get to the point about private sector investments, Mr. Kant, you said you are a believer in fiscal discipline. The finance minister just a short while ago said stimulus is a word speculated by the media, and he used the word response. Is there a need to respond, and what could that response be?
So if you need to respond, you've got to be extremely careful that revenue expenditure, if you look at both the center and the state, and while the center has been extremely disciplined in terms of sticking on to its fiscal targets of 3.2, the states also need to be extremely disciplined, because it's both center and state together in terms of the fiscal discipline. And it's important that we must realize that the government in totality, both center and state, when it pushes for increased allocations, for subsidies, for interest payments, for farm loans waivers, it does immense damage to the Indian economy. And therefore, there's a need for huge discipline as far as revenue expenditure is concerned. You still have a possibility if you're pushing, and my belief is that you need to push for quality of expenditure. It's not about expenditure. It's about the quality of expenditure. If you're pushing for expenditure on projects which are at very advanced stage where you can push for implementation on ground, if you're able to push for exports, if you're able to push for bank capitalization, these are issues which are a challenge for the finance minister. He's talked about discussing with the prime minister. I've just walked in, so I'm not aware. My flight was late, so I didn't hear him out.
Okay.
But my view is that it's not about expenditure. It's about quality of expenditure, which will push the limits of growth of Indian economy.
Fair point. I'll come to exports in just a bit. Shankar, the point Mr. Kant is also making is that the private sector is not spending enough, and there are reasons for it. There is a large debt problem, there is insufficient capacity utilization. What's going to motivate you guys to go out and spend?
I think it's a bit of a complex problem. The private sector is in the current phase after investing heavily, and the finance minister did mention that the jury being out as to how much of that was indiscretion and how much was a calculated risk. Representing private sector and representing a firm which is dealing with investments, I would like to believe that India then provided and now provides enormous opportunity. I think there's no debate about the opportunity India provides. It's just a question of how each company gears itself to utilize the opportunity. Some of the investments tend to be very asset heavy, and hence the load on the balance sheet becomes heavier than normal, and some of them are reasonably asset light. What the private sector is facing today is the pressure to generate returns on the investments that have been already made. While there could be a lot of reasons as to why we can't overload the balance sheet until corrections take place, it's going to be very important that each one of us have a roadmap for improving the return on equity so that we regain the investors' confidence. I'm not talking about the stock markets. They seem to be spinning in its own orbit. I'm just talking about the fundamentals, what the balance sheets show.
Sure.
So my sense is investments will follow the minute the managements are confident that the return on investment will far exceed the cost of capital.
Okay. I'll come to the stock market in just a bit. Shanti, why don't you respond to this as a banker? The government is expecting the private sector to go ahead and spend at a time when consumption demand has been hit very badly. A, what's your reading of consumption demand? And, what can get these guys to spend?
Let me divide the investment into two parts from the private sector, as Shankar had said. One is the investment in infrastructure, the other in manufacturing. We talked about, defense, others, new sectors opening up, etc. You're not really seeing too much investment in either. I think the first part, as far as infrastructure was concerned, I think many people burnt their hands. Many have succeeded in setting up projects, but there is a large part that's stuck, and thus there is a lack of confidence. And Mr. Kant is absolutely right. Government has front-ended investments for the last 6 months, a large part in expenditure, which has really kept up the growth in a certain way. The second is really a private sector investment into manufacturing. The issue is there are surplus capacities today, and demand has not necessarily come anywhere close to utilizing the capacities. And normally you have a 3-year ahead investment cycle, which people are not seeing. You asked about consumption. Let me come to that. In fact, if you ask me what is holding up the economy today is still consumption. Urban consumption, because of the aspirational value, which even the finance minister had alluded to, people still go out and spend money, whether it's on a home, whether it's on a car, whether it's on travel, whether it's on discretionary spends. It is there. Rural had taken a hit, but in the last 1.5 years, thanks to the monsoon, is coming back.
Right.
So if you ask me, yes, perhaps it may be muted if you compare it to the heydays, but there is still consumption happening. The issue is there is enough money in the system, but there is what I call the financialization of the economy. Money is really flowing into the financial sector, into markets and others, rather than into assets, real productive assets, right? And second is really that there is a shift from physical assets. So the issue really is, yes, private sector investments are not happening. It is not that people do not want to invest, but people have lost equity, have lost in projects, and are yet not seeing capacities being fully utilized. So what are they doing? They have to still generate earnings, right, for their stakeholders. So they are focusing on productivity. They are focusing on, how do you make things more efficient, which causes more problems on employment.
Okay. Ashish, the point that Shankar was making, we're talking about whether the economy is going to rebound or not. The market seems to be on a different trajectory. We're talking about we're near 10-year record highs. The headline on Bloomberg today was the bull market and a slowing economy. Is the market betting on a rebound in the economy, or is it just betting on short-term froth?
See, if you see the Indian economy for the last, I think, 4 or 5 years, actually 3 years especially, it has not been firing on all engines, but there are parts of the economy that have been doing well. And I think what happens to us is we all have a fairly schizophrenic kind of an existence where we sometimes see the glass half full, half empty. I think in the last couple of weeks, everybody started being concerned about growth. But if you look at it, I think in the last month, steel producers increased price by another 3,000 rupees. So we're saying steel is doing well. We're doing cement is starting to come back. Housing also, especially affordable housing and all, is starting to do well. Auto is doing well, financial services is doing reasonably well. So there are parts of the economy that have been doing well and continue to do well. There are other parts like exports and all, because of global issues and all, has been struggling. Parts of Indian manufacturing have been struggling because of, we are also interlinked with the global economy. If there's overcapacity outside, we get affected, especially as the rupee has got stronger. I think this ability to take risk also, I've been surprised in the last 5-6 months. I'm sure you would have also read a lot of these cases which have gone into NCLT.
Yes.
There are a lot of people interested in buying those assets, steel plants and cement plants and power plants. So the company's ability to invest money and acquire assets has been there. So my hypothesis is that I think people want to buy something that can produce returns quickly. So if you buy a steel plant which is working at 20% capacity utilization because it's an NPA, and you can take it up to 70-80% and get back your returns, I think people are interested in that because there are opportunities on that. Almost every good asset in NCLT, there are three, four potential buyers now. What people are hesitant to do is take a long greenfield 4-5 year kind of a view, because execution on greenfield projects in India, people have struggled with that. And especially, acquiring land and clearances and all that. So, and you also want good investors for that. So I think there is interest in the economy. There are parts of, like currently paper is doing well. So there are parts of the economy that continue to do well. We think there's a big opportunity in affordable housing.
Sure.
There's a big opportunity in electronic assembly and manufacturing. So there are opportunities, but I think currently we seem to get very bogged down by the parts of the economy that are slowing down.
Okay, fair point. Mr. Khan, let me shift focus now to talk about exports. This is the investment side of the story, and we've heard everyone talk about it. On the export side, which many people have argued has been the key reason why you're seeing the slowdown across a couple of quarters. As Niti Aayog, as the head of the top policy-making body in this country, what is your policy prescription to get exports out of this funk?
Well, firstly, I'd just like to respond to the point Mr. Shah was making, and I think, it's, to my mind, it's the government must push for projects which have been, where revenue streams are well assured and which are fairly de-risked, and where it's possible to bring in private sector pretty early. There's no rationale to my mind, of government running and operating national highways, which have already been completed. They should be put outside into the market, and you'll have private sector operators coming in. There's no rationale at all for government to be running airports. I mean, why should a series of airports in Tier 2, Tier cities be run by the Airport Authority of India? Put them out into the market. You'll have better operation and maintenance. I was in Ahmedabad recently on a new airport, water leaking, bathrooms badly maintained. Put them out into the market. You'll have private sector investment coming in. Why should the strategic disinvestment not be pushed far more rapidly? We need to push it far more aggressively. And we've done a huge amount of recommendation from Niti Aayog, and I think we'll work in partnership with the government to push for it with even greater vigor and energy. And all this has the possibility of bringing in a lot of private sector investment and reviving the animal spirits.
Sure.
That's important. Secondly, I don't think any country in the world has ever grown for long periods of time. I mean, historically, whether it was Japan, whether it was Korea, whether it was China, no country in the world has for long periods of time ever grown without penetrating global markets. And therefore, many Indians keep talking about domestic market, domestic market. We must, first of all, as Indians, must understand that we have a large domestic market, but the export markets give you 10x of what you get in the domestic market. So Indians must start thinking in terms of size and scale. The problem with our export is that our manufacturing is very minuscule. Our manufacturing, Indians never grow out of being small or medium. Unless and until you don't start thinking of large in size and scale, it'll be very difficult for India to grow over a 3-decade period.
Okay.
Until you don't penetrate markets. And this requires several things to be done. Our logistics must become far more efficient. I mean, we've created a huge monopoly out of the Inland Container Corporation the Railways Container Corporation. Why not put it out into the market? Put all these depots out into the market, you will get private sector investment. Where is the risk? The government must push many of these ready-made infrastructure out into the market if you want private sector investment. You want investments? These are a whole range of projects which are being managed inefficiently by the public sector. Put them out into the market. You will have a huge flow of private sector investment in. You will bring in efficiency. You will bring in better operation and maintenance. But let me tell you, till India's exports don't grow rapidly, till we don't penetrate markets, and it's not on the basis of subsidies. I'm talking about the competitiveness of exports. And competitiveness of export means that you must manufacture to size and scale.
Okay, on that point, Mr. Kant, exports is also extremely linked to where the currency is. And this is the right point for me to bring the pigeonhole question of the day. If you want to participate in it, please log on to pigeonhole.at with the passcode BBGIN. And the question that we are asking is, do you expect the Indian currency, the rupee, to strengthen in first quarter and second quarter of 2018? Rashesh, INR was the best performing currency in the first half of 2017. Now suddenly you've seen this turnaround. You're seeing a turnaround when there is capital outflows, widening CAD. How do you see the rupee behaving here on? Because that's a key variable in export competitiveness that Mr. Kant is talking about.
Yeah, actually it's been a very, I think even now there are a lot of people in this country who believe that a strengthening currency is a sign of strength. It's a great thing to be proud about. But all over the world we are seeing, I think your competitiveness, India still has inflation. We have, 3-4% inflation. So we do need a currency that is competitive. But while our CAD has been widening in the second quarter, we are seeing some phenomenal FDI flows. Even today when the bonds were auctioned off, there's a huge amount of demand in the bond market. So the portfolio flows are more than offsetting the current account deficit. It can't continue for a long time because ultimately I think you have to earn also. But I think India can manage a 2 to 3% current account deficit, which are offset by the portfolio flows. But I do hope that the rupee continues to weaken. And I think the fair price of the rupee should be 70, 72, at which a lot of our steel companies, a lot of our other exporters are, it's not just exporters, it's also the what I call the tradables industries in India, like steel. Steel, we get a huge fillip at 70, 72 rupees, because then they can compete with the Chinese imports and all. So I do think the rupee needs to weaken, but I think the portfolio flows will somewhere act as a cap. But I do hope that this current trend with, that has started, we should see about 66, 67 soon.
Okay, let me shift the conversation now to the second pillar of this topic, bank cleanups. Shanti, you may want to comment on this. The Reserve Bank of India and the government have taken a bunch of measures to clean up the system of NPAs. Is the framework working to your mind? How long do you think this is going to take for a resolution?
So I'll take a leaf out of what the finance minister said. I think at a policy level, this was absolutely the right thing to do, because you saw for a long time that there were issues in resolving large NPAs in the system. So this whole system of NCLT and referring cases from a policy level is absolutely right. But we must give it time. There is a time frame that has been rolled out by which time, resolutions have to happen. You have the IBP framework where you have people who will resolve. And so I think we have to give it time to see how it resolves. Given the policy, and if we actually see it operate within the timelines, it will have far-reaching impact on the banking system. I think it's early days yet. I think it's extremely critical that it gets resolved. And I think everybody, all the stakeholders are working towards it, but we will have to wait and watch how it flows out.
I'm going to get Mr. Kant to respond to that, but just before that, I want to ask the same question to the audience. Do you think enough is being done to address the issue of NPAs of banks? If you can bring up the pigeonhole question and get a sense of what you're thinking in the audience. Mr. Kant, why don't you respond to that as well?
We don't have...
Actually, if I could just interrupt you. An overwhelming majority believe that not enough is being done. Am I getting that right?
Yeah.
It's changing, yeah, it is.
Go ahead.
So, I'm a believer that you don't have the luxury of time. So whatever you need to do, you need to do it expeditiously. I mean, this process of evergreening of bad debt can't go on. And I think what the government and the RBI has done, it was absolutely critical. It was absolutely necessary. We needed to send out a message to the corporate houses that this government believes in integrity, this government believes in discipline. And therefore, this was necessary. But having said that, whatever needs to be done extremely expeditiously. And my personal view is that we could have acted much quicker, much faster. It's been through a lot of processes, and I think the process of NCLT, etc., would be a time-taking process. And we need credit to flow in. We need credit to move out, and therefore, we need to think of much quicker and expeditious processes of actually ensuring that companies which require credit, that's number one. But number two is our ability of, and I think it's very important to say this, that we must encourage bankers to take far many more risks. And the Indian system must encourage bankers to take risks to support the right investors, number two. And number three, it's very critical that there's also a feeling that there's no poverty of funds, but there's a poverty of well-structured, good projects which will give you returns over a long period of time. And therefore, there's a role which all of us need to play in government and everyone together. That is to ensure that projects are well-structured, they are de-risked, and when they are put out into the market, we ensure that they are well implemented and that there's predictability, consistency, and clarity of policy over a long period of time, so that infrastructure projects have assured returns over a long period of time. And this is very important because we'll keep making the same mistakes otherwise. And I think it's important that the KELCA committee, which has talked much about what needs to be done in terms of risk allocation for PPP projects and infrastructure projects, because the game is about, I mean, India's dying for great infrastructure. Infrastructure can't be created by government. Government will keep putting in money as long as there's absence of private sector investment. The more you force government to put in money into this infrastructure, government will create shoddy infrastructure. And therefore, you need a high-quality private sector investment into infrastructure. And you need world-class infrastructure. India has reached a stage of its growth where you can't afford second-class infrastructure. Sure. You need to create world-class infrastructure. And that's best created by private sector. And therefore, you need to ensure on a long-term basis that projects are well-structured, de-risked, put out into the market, and there is a huge onerous responsibility on the government also to ensure that there is predictability, consistency, and clarity of infrastructure policies over a long period of time so that private sector is able to generate returns on this investment.
Okay. We've spoken about, go ahead.
If I can supplement, I have the mic, sir. Sure. On the point of exports, one other thing that occurs to me is, I think we need to find out ways to strengthen our EXIM. You find many delegations, business delegations who come into India trying to sell their goods and services are backed up by sufficiently bankrolled schemes. India and Indian EXIM do not go out calling on global markets in a combined manner. And we often tend to look at Indian EXIM as not a first recourse, but as a last recourse. So there is a capacity constraint in terms of capital that is being made available. The credit guarantee insurance schemes needs to be boosted up. And if that can be done, a portion of what Mr. Kant attributed, that India should step out, gets enabled.
Okay. My last round of questioning is we've spoken about investments, bank cleanups. The third one is, and the most important one I would reckon, jobs. This is a ticking time bomb. If you're not going to be creating enough number of jobs for a young, rising population, then we're heading towards social upheaval. Shankar, maybe I'll start with you. What do you think government needs to do? What do you think private sector needs to do?
I think the fundamental point that all of us have to recognize is the skills required to be relevant for the next 10, 15 years is going to be very different than the skills required in the past 10, 15 years. Today, unfortunately, and since I come from an engineering company, let me talk about engineering as a case in point. Engineers are today produced as a degree, it's no more a discipline. You don't find as many doctors going and working in an investment bank or a media, but you find engineers, several of them migrating into areas other than core engineering. Why is that happening? Now, if you examine the career prospects that the country is able to provide and the opportunities alternate, there is a very clear preference to alternate opportunities. So we need to recreate the excitement about being engaged in core manufacturing. Now, India has come to a time, in my opinion, where we should get away from this me versus you attitude. The government and the industry should learn to work together. Both of us are actually believing the same theme, that India needs to actually blossom to its potential. Instead of trying to outguess each other as to who's doing more, who's doing less, I think if India, the Inc., let's say, and the industry and government is able to come together, skill India very rapidly, and that is something that is scalable. Now, some amount of responsibility the industry also has to take, because it's going to benefit from those skill sets.
Correct.
But a lot of push also needs to be done from the appropriate government to make sure that it is remunerative for people to get skilled in the areas.
Rashesh, on the question of jobs.
Actually, I think the problem of jobs is actually all over the world. I think in India, if you want to create jobs on a large scale, really, I think the three opportunities we have, the first is in housing, because housing is one area which can take a lot of unskilled workers also. I mean, unskilled, semi-skilled workers, and you can take them in a huge amount. And it also has spin-off effects on steel and cement and all other ancillary benefits. So I think housing is one area that could be a catalytic industry in terms of getting this job cycle started. The second, as Mr. Kant spoke about, is large-scale manufacturing, because that opportunity still exists in India, not just for the export market, but even for the Indian market. But large-scale manufacturing, which can have, like electronic assembly. We use so many cell phones and electronic appliances. We don't need to import them. We can actually at least assemble them out here. So there are a lot of opportunities in that. And the third one is in self-employed entrepreneurs, because increasingly the global economy is becoming a gig economy. A lot of self-employed, we are seeing Uber drivers and all that. I think even if you look at the capital availability, usually self-employed people, it's hardest for them to get access to bank loans, and hardly ever anybody gives them money. So I think getting capital to the self-employed entrepreneurs, because they not only create jobs for themselves, but they'll create at least 3, 4, 5 other jobs.
Sure.
So I think these three categories can really take large amounts of people who will find jobs.
Shanti?
So I want to take the third point first. I think what we're not seeing is the amount of entrepreneurship that India has spawned in the last 2 to 3 years. A lot of it may be attached to the IT, digital, logistics, e-com, the supplier network, etc. But there has been an enormous amount of entrepreneurship that India has spawned, right? As Mr. Khan said, they are still very small units. You want to create jobs on a very large scale, it has to be in the manufacturing. The services sector so far was one of the largest employers, if you look at IT services, if you look at banking and financial services. But I think everybody is into, like we said, skilling and productivity. Both of that are resulting into slowdown to some extent. So I think it's got to be a combination of continuing to promote entrepreneurship through policy measures, providing seed and access to other capital for entrepreneurship, because India is very good at entrepreneurship and you can grow, and energizing sectors like manufacturing, and I'd say even agriculture. Even today, 60% of India is employed by agriculture. Yep. Rejuvenating, providing some new skills, techniques, etc., that can really rejuvenate the sector. And it is also closely linked to investment. I think as you see investment in large projects happening, employment will follow.
Mr. Khan, last word before I throw this open to the audience. What is the thinking within the government as far as the question of jobs is concerned?
Firstly, much of the debate on employment and jobs is based on the Labour Board Bureau statistics, which is a very incomplete picture. It just takes into account 1.4% of the enterprises, doesn't take into consideration many of the new generation jobs, doesn't take into consideration informal and jobs which are up to 20 people. And this Labor Board Bureau of Statistics was initiated when the downturn in the Western economies happened. So it's totally a flawed statistics to my mind. If not flawed, it's incomplete. My view is that, actually there are a completely new set of jobs which are getting created. I don't know how many of us are aware that Ola has actually created 650,000 new enterprises. I mean, they're not drivers, they're entrepreneurs, they own cars. Uber has created 450,000 new jobs. I was quite surprised when the IIT Mumbai director told me that last year, out of the graduates who passed out, 37% of them either started their own startup or joined a startup. And you're seeing a completely new energy, vibrancy, and dynamism in our startup movement. So completely new kind of jobs are getting created. But having said that, I think it's very important to say that India must embrace technology. Whether we like it or not, artificial intelligence, manufacturing 4.0, all this is upon us. And we must embrace technology with all our might. And even if we do this, states like Tamil Nadu, Gujarat, Maharashtra will embrace it. But there are vast areas of labor-intensive sectors, textiles, food processing. The whole of Eastern India is dying for, you need massive investments in food processing, value-added chains. And so food processing, gems and jewelry, leather and footwear exports, these will remain labor-intensive sector. So these are critical. The third point I want to make is that in India, the problem is not about unemployment. The problem is about underpaid jobs and disguised unemployment. And therefore, you need people to move out of agriculture into other sectors. And therefore, I think it's, there is a very important need for restructuring the system of governance in at least 7 states of India and 201 districts which are holding India back. And unless and until you don't transform the 7 eastern states of India and 201 districts of India, which remain backward, it will be very difficult for India. You can talk of any economics in St. Regis Hotel in Mumbai, but without 7 states and 201 districts of India being transformed, it will not be possible for India to grow at 8 to 9 or 10% for 3-decade period. It's not feasible. And I think, therefore, in these states and these districts, good governance must become good politics. We are trying to do that by creating a sense of competition, ranking, naming and shaming them, building, much like ease of doing business where we rank states. We're ranking states on education, health, water management index, putting it out in public domain so that people then start voting for governance for states which are well performing. And we'll do this for district hospitals, for district schools, etc. It's very important. And the last point I want to make is that you can't have jobs in 21st century with 19th century institutions. You can't have a corrupt Medical Council of India trying to create jobs for hospitals, for doctors, for pharmacists, for nurses. And therefore you need to, we've recommended the Medical Commission, which is where doctors can't select doctors themselves. You need radical changes in UGC and AICTE. You need new institutions to create jobs. I mean, you need to use the highest outflow of foreign exchange is because Indian students are going abroad to study in all third-class universities. You go to some vague university in New Zealand, you find an Indian student. I mean, you need to create Oxford and Harvards here, as the Prime Minister keeps saying, rather than sending out students all over. And once you start doing this, you'll create a vast number of new jobs. You'll open up new hospitals, you'll open up, you'll have new doctors, you'll have new nurses, you'll have new pharmacists, you'll have new teachers, all next generation people. But you can't do this with the present institutions. You need an institutional restructuring of India.
Okay. On that note, let me throw this open to the audience. If you have a question to the panel, please raise your hand. We'll pass the mic to you. The gentleman in the first row. Please identify yourself and your question.
Hi, this is Sanjeev Mohta from East India Securities. My question is for Mr. Amitabh Kant. You're obviously very passionate about disinvestment. So how soon we see it visible in government action?
How soon will you see visible government action on disinvestment?
Well, Niti Aayog is the recommending authority. We've recommended a lot. I think the amount of recommendations, very strong recommendations that we've made are very far-reaching. You know, I mean, we've done a vast number of, in 5 tranches, we've made massive recommendations for strategic disinvestment. We've made massive recommendations for loss and sick-making units. I think the DIPAM department in the Ministry of Finance has moved forward. The process of transaction advisors and, takes a little time, but I think they are at a fairly advanced stage now. So you will see a lot of action happening in, the important point is that the cabinet has decided in favor of all that disinvestment. So there's a lot of political will to push it. It's just that you want to carry it out in a transparent, competitive manner. And that's important for government, and therefore that process takes time to appoint transaction advisors. But you will have a lot of action on disinvestment, and we'll keep pushing the limits on that.
Yes.
Hi, Rajesh Kothari from Alpha Equity Advisors. This question is Mr. Kant. Do you think BTT instead of income tax is basically what government is considering, and what are your own thoughts on pros and cons?
Sorry, I'm unable to hear you. If you can come a little louder, please.
BTT instead of current income tax, the banking transaction tax, from the government perspective, how do you think pros and cons of this system compared to current income
Banking
tax system?
transaction tax instead of an income tax.
Yeah, replace income tax with a banking transaction tax.
You know, I'm quite illiterate on this. I've the only 2 people really equipped to answer this is, one is Mr. Hashmukh Adia, who's the Revenue Secretary, and the other is Mr. Subramaniam Swamy, who's a very strong advocate of doing away with income tax.
Anyone else want to comment on this?
See, I think ultimately income tax is obviously a lot more progressive, and we are at a stage where we need to encourage more activity through the banking system. Entire demonetization and all was to bring what is outside of the banking system into the banking system. You don't want to have a tax which might drive activity, outside of that. So I think an income tax has to be there because it is the most progressive form of, trying to get some resources from people who can afford it and invest it for the country as a whole.
Okay. Any other questions? Yeah.
I think almost all the questions are addressed to Mr. Kant only, and I am no exception to that one. Okay. My question is Mr. Kant only. You were talking about agriculture. In fact, you've been talking about the employment, labor. If you look at Mr. Shankaram was saying, the engineers become a degree. It is not a discipline anymore. If you look at most of the things, the startups are mostly, as I said, only technology-oriented, digital-oriented. But how long is this going to continue? Mr. Kant was saying, you have to think a lot, big. But one thing which I want to differ with Mr. Kant is that agriculture. He said, get out of agriculture. For me, I said, get into agriculture. That's going to be a future. That's because, and unfortunately, agriculture is no more, it's actually not considered an industry at all. Make it an industry. Make it commercially viable, and most of our employments will be getting generated only from agriculture, not from any other industry. And not only that, today we are not able to conserve any of the resources, be it rain or whatever it is. Almost every village, people are just getting out of a village, only seeking employment, just because they're not able to do anything without natural resources. But how the government is going to address this one? Then personally, the second question is that you're talking about the institutions, okay? We need to go ahead. See, this is institutions slowly becoming privatized and becoming far from the normal person's approach, okay? Access. Actually, the government has to invest in medicine and education. Unless the government doesn't do this one, it's very difficult, and it's more and more as the days passes, okay? And it's going to be very, very costly for a normal person. This is the question.
Thank you.
So, when I was talking about, getting out of agriculture, I was talking about getting out of the number of people in agriculture. You can't have, what you're talking about agriculture, you can't have industrialization of agriculture with 66% of your population dependent on agriculture. There's a huge amount of disguised unemployment in agriculture. You want enhanced production, productivity, you want mechanization of agriculture. This is what you're talking about. And I totally agree with you, but that is possible That will be possible if you are able to take away a huge dependency of a very vast segment of your population on agriculture. You must understand this. You know, the extent on, if you go to eastern part of India, I mean, everybody is dependent only on agriculture. And it's not possible for agriculture. You need a second green revolution. You need new technology. You need mechanization. You need land leasing to be able to do it on large scale. You need contract farming, all that. I totally accept all that. But you can't do it with such a vast number of people dependent on agriculture. You need to reduce the dependency of people on agriculture. That's very important. Without that, you can't do this. And secondly, on medical and education, and so, no, I agree that primary education and primary health care is very much the responsibility of government, and government must invest in them. But you know, to my mind, on the health, for instance, the government must invest 2.5 to 3% of its GDP. But the expenditure by government has been hovering around 0.9 to 1.2%. This is the first time that the government has actually overstepped its outlays on health. And in the process, what's happened is that we've opened it up to the vagaries of the private sector, many of the people in a non-transparent manner. So I'm in favor of government spending more on private sector, but on the tertiary sector, we need to bring in private sector through a very transparent, competitive process. But primary healthcare and primary education, particularly the quality of education, because we've been able to provide access of education, but the quality of education has declined. I mean, the 40% of the children in India not able to read their mother tongue, 5th class student not able to read his mother tongue of class 2, or not able to do addition subtraction of class 2 in class 5 is a shocking statistics coming out in surveys after surveys. So we need to enhance the quality of education, and my belief is that we need to bring in a lot of technology to be able to do this. It can't be done simply by teachers, because teachers in rural area are doing more in absentia. So you need to use a lot of more technology to ensure that the quality of education improves.
All right. On that note, I'm completely run out of time. Many thanks indeed, all of you, for joining us, and thank the panel as well for this interesting conversation. May I now call Sunny Chabria, Head of Terminal Sales, to present a token of appreciation for all our panelists. Join us for cocktails and dinner on the other side.